Street Gang, this is Almighty. Standing by, over.
The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army.
Over. CBR Street Gang, this is Almighty. Standing by, over.
All right, let's get the microphone check out of the way here a little early today. We do have quite a few people joining us from various Discord servers currently. Some of you are coming in on the Twitch side of things. If you are coming in from Twitch, I do suggest, and or X, I do suggest for a better quality stream, you head to YouTube. That is linked in the video description. or my profile description. So for, hold on one second. Got one of my microphone, or one of my earphone. Man, it's all messed up again. So either way, headphones just aren't working now. Either way, if you would like a better quality stream, I do suggest you head on over to the YouTube stream. It's going to be a lot cleaner for you. But you can get a general idea on X. They do just kind of crap all over the quality of the stream by compressing it all to hell. If you are on X, just follow the main profile link. It heads right to YouTube. And the same for Twitch. I do see quite a lot of you piling into Twitch. Not really sure how you got that link because I don't usually share that link. But either way, come on over to the YouTube live stream if you want better quality. If the X side of things is doing well, you can hang out there as well. I do see that chat is working now on X. Very good. Please let me know if you can hear me okay, and I haven't just been talking to no one. And we're going to get started here in a little under a minute or so. Okay, so it appears that you can hear me okay. We're going to go ahead and get the music under control and get rolling. Thank you, Bobby. Excellent. So it looks like we got some NBO peeps in here. I said peeps out loud instead of typing it. That's how you know I spend too much time online. We also have some Sigma and I think some Pepe Ordinal Maxis in here as well. Sweet. In addition to the folks that regularly show up for the TA live streams. Very nice. For those of you that were asking me about voice chats on Discord, I will be doing that in the NBO server. And I'll also be joining in on some of the voice chats, hopefully, soon for some of the other servers. I know that Blue the Pitbull over at Pepe Ordinals Maxi also runs pretty much a daily voice chat. Pretty fun stuff as he's driving to and from work. Good stuff, good stuff. And then I believe we've got a few Nat Monkeys in here as well. Good to see everybody coming in. I'm going to give it just another moment or so because there are some people saying, hey, I can't get in. Wait. So I'll give you all a moment to get settled in, and then we're going to get rolling. You're going to hear a little shuffling around in the background here for a moment. Yes, Landy quit smoking and uses nicotine pouches now, so you're going to have to bear with me for just a second. Thank you for the suggestions on the headphones. It's actually just, it seems to be an issue with a short in the cord. I sound better. I'm still feeling a little under the weather, but I'm starting to get better. I appreciate that. Oh, okay. Yeah, let me excuse me. Let me pause the music on my side and we're going to get into some TA. Yeah, we can keep it like that. That's fine. Let's roll right on into it. Hello and welcome to Landy's Crypto Corner for Macro Mondays market analysis, where we take a look at Bitcoin on some of the longer term timeframes and weave that into our daily analysis as well. So over the weekend, we did see a pretty nice move up. This was a continuation of the Friday move. So Bitcoin so far it has completed the meme pullback. And yes, it went a little bit further than the typical pullback that Bitcoin has been doing in terms of corrective phases of about 20 to 22%. We did see this one come down about 23.5%, but that's within the margin of error. So I do consider this, meme pullback number hit. And we need to see a few additional things, though, for Bitcoin to complete a reversal and begin to, of course, change market structure and initiate some of those deeper upside targets, not just back to the local range and taking out some of the local structure, but also taking out the highs and higher, of course. In this case, Bitcoin swung down and it met the criteria that we've been talking about for a couple of weeks now. Since Bitcoin got up into this range, we've been discussing this monthly from October of 2021. Now, this was the first big monthly high on a close, and that came in at 61,350 or so. It's technically a little bit under there, 61,343. And then, of course, that was right before putting in the all-time high in November, which was at 69K. Now, of course, that was on a wick, a shadow, a swing, whatever you'd like to call it. And then we had the other monthly high just below it that's also a quarterly high, and that is at 58.8, and that's coming in from March of 2021. Now, previously, Bitcoin had tested this area after, kind of blasting off right through that monthly zone and then finding initial resistance at the all-time high zone between 65K and 69K. Of course, we saw the big wick down into that monthly zone for liquidity, came up, made the new all-time high, and then came right back to it again. Tapped on it, went sideways, then held the monthly swing zone up here between 65 and 69, popped up above, swung and failed to close above the wick highs up here at around 71,800. After doing so, started to break down from 69K, then 65, came back into this monthly zone yet again, swung up into the swing high zone, and then, of course, this deviation for the meme pullback. Now, Bitcoin is not out of the woods just yet, and I do know that many are kind of declaring this as correction over and are very excited about further upside, all-time highs and higher. And quite frankly, we have not seen Bitcoin change market structure just yet. This is still a daily downtrend. Yes, we did hit the meme pullback, coming in at between the areas that we were talking about, between $56,000 and $58,000 is what I wanted to see. And then, of course, the other criteria to be met there was to close back above 58.8. That would start to look good to at least go test this monthly at 61,350 to wherever the basis band was. And it actually came right up to it on that Friday at around that 63,800, 63,500 to 800 or so. And then I had mentioned that if we did see Bitcoin start closing back above 61,350, we were likely going to find resistance right where this rejection came in at $65,000. It did swing up above it, but that area has turned into at least a shorter term time frame rejection and, of course, a daily rejection as it stands so far. Now, if Bitcoin does lose the basis band on the daily here, which is coming in right where price is trading, and that is at around 63,350 or so, then I would look for it to potentially trade back to this monthly by the daily lower first. You can't really see it on the chart here, but the volatility levels of the Bollinger Bands here is coming in right at that lower first, right at the monthly at 61,350. If that area, of course, is lost, I'd be looking for a swing back to the low side structure at minimum down to the lower second standard deviation coming in at around $59,000 to, of course, that monthly quarterly zone at 58.8. Any price action below there, any kind of breakdown below there, I'm looking for the lows again, somewhere between that 56 and 58. Can have a stray wick kind of land anywhere. We'll discuss that in just a moment. If we do see the lows dropped, though, on a close, that would be re-expansion back to the downside. We got slight expansion, but then a beautiful bounce off of the lower second, lower third zone to complete that meme pullback. But if we start to see that area break down yet again, I would have to lower the potential targets down to this $53,000 to $50,000 area. These are weeklies coming in from September of 2021. They're at 53. Of course, we had most recently seen this area tested and rejected initially back in February of this year. And then, of course, we have the August and December weekly closes here that are coming in from 2021 as well. That area was held as support. That's around 50,800 to 51.8 between the two closes there. Did swing down slightly below, and I would give it some room between $50,000 and $53,000 if we did see this play out. Now, it is all conditional. You know, we did see this area as resistance and then again as support back in February. So, you know, these historical levels are very, very key. And, you know, I would not be surprised if this low did get dropped at 56,500 and not just get swung, but dropped on a close for us to see Bitcoin expand down into those weeklies there and at minimum go for a retest. Now, it is conditional. Bitcoin is back kind of in the median of this range, you know, in the low $60,000 area. What does it need to do in order to head up? Well, in order to change market structure right now, there's a few different options to be looking for on price. And that is for Bitcoin to come down, make higher lows or equal lows. So comes back down, maybe dips its toes into the monthly zone or the high side of the monthly zone, somewhere around 61 to 61,350 here at the monthly. And then, you know, puts in a daily higher low. And then it could take out its most recent swing high here at 65.5 by the upper first standard deviation on the daily. Then I would be looking right up to $67,000. It does need to recover that area and close at minimum a daily above it. That is by the daily upper second standard deviation of the volatility levels of the Bollinger Bands. And then, of course, above there, I would be looking for a pretty quick trip to $69,000 to $70,000 by the previous all-time high of last cycle in November of 2021 to around $70,000 at that upper third standard deviation on the daily. Above there, I'm looking for the highs somewhere around, you know, that 70 to 73 right in this zone up here. And then, of course, the all-time high at 73,835 and higher. Now, we will discuss some further upside targets from there, but that is generally what we would need to see. The other option is that Bitcoin, you know, kind of goes sideways, tracks sideways, doesn't necessarily put in a closing higher low, but instead puts in a consolidation with a nice swing low. Maybe it's here, maybe it's a little bit lower, and then proceeds to take out $67,000. I would actually raise that just slightly to $67,300. You do need to see a daily closure above there. Of course, again, that would put it back above the upper second standard deviation. We look for a 3 or 4 candle or more closing low after. So, you know, there is conditions that need to be met for this to, you know, be constructive price action to the upside. If it just kind of zooms through, we do need to see higher lows. If it does fail here, we need to see higher lows and or equal lows. If you start to see any kind of lower lows that just swing and put in divergence on RSI and momentum indicators and stuff like that, then, you know, we still have to have the $50,000 to $53,000 weeklies down here on the board, but they're not necessarily as relevant. You know, this is, in many people's estimation, a bull flag. I would say that it's going on a little bit too long to be a bull flag for the daily. You might get some people that are like, no, it's flaggy on the weekly. And, you know, that is fair, but when you see a bull flag on the daily, you do at minimum need to see some in trend. So that means we're in a current downtrend, and you do want to see some bullish divergence forming. So we do not see any in trend, meaning that we are currently in a daily downtrend and we do not see any bullish divergence forming. Now, granted, there is historical bullish divergence, otherwise known as hidden bullish divergence, coming from that $50,000 level. That's this low over here on RSI. The rest of this RSI read is within the current consolidation structure. So at minimum, I want to see an in-trend bullish divergence form at least one drive. I would like to see more than one. 2 to 3 is typically what you want to see. In this case, if Bitcoin did head back down to the bearish control zone or the edge of the bearish control zone, we're looking at, you know, price around $58,000, maybe $59 if it pulls up ahead of that area. If it starts to dip down any lower, for instance, it starts to get down to an area where it could still throw bullish divergence, or regular bullish divergence in this case, it has to remain, it has to make a lower low. It could get bullish divergence by making lower lows than what are relative to not just the last low, but the in-range lows as it currently stands, as long as it's making higher lows on RSI. So it could get some bullish divergence in range. For instance, it could get bullish divergence right from this low, just above $65,000. It's kind of right on the edge, to be quite honest. You could look at possibly the next low before it, which is coming in at around that $61,800 to $62,000 on a close. But if you're looking at the trending bullish divergence, if it was going to go down and drop this low, what would price look like, or where would it be in relation to the RSI read on that last low coming in at 56,500? Well, we can actually calculate that with this particular indicator. This isn't something you're going to have access to. This is an app.cronetrading.net RSI by who did this one? Actually, I don't remember who did this one. It's not KVDB. This might be the Caretaker. Now, I don't have any affiliation with them. You can find plenty of RSI indicators with bull divs and bear divs and stuff like that. The reason why I like this is I have my indicator. I asked the Caretaker to if I could pilfer some of his code. He gave me his blessings. So I typically use a lot of his indicators as he's just a really good guy. And I do like to support him and his work. Now, in this case, we have a 33, so it'd probably need to be around a 34 read. And I'm clicking the wrong stuff here. But this has this little info box on the side here, and we can change the bullish control level to be, it would have to be what, like a 44? Oh, I'm sorry. This would be a 34. Sorry. Let's go fix that. So this would be a 34 read to maintain bullish divergence. So that would be higher lows on RSI, but it would typically result in this case, it would result in slightly lower lows on price action. This is actually coming in at 55,255. Now I want you to keep that number in mind, because if we did see Bitcoin, swoop down and try to reclaim those lows bearishly, but pull up, and or slightly just close below the last low, then we could see bullish divergence form there of the regular variety. And the 55,250 to 55,300 is an important area that I'm going to show you here just in a moment when looking at some of our moving averages. So for those of you that have asked me, you can get the Landy Bands with Trend Checker. It's in the video link in the description. It's also in my profile, in my X profile rather, on X or Twitter, formerly Twitter. Now, this is a free indicator. It is private, so you do need to follow that link in order to add it to your favorites on TradingView. It will be released publicly, but it is still a work in progress. I'm adding more features to it. We're going to have multi-time frame levels for the volatility levels of the Bollinger Bands coming in here pretty soon, and a few other bells and whistles. But let's go ahead and turn on some moving averages here. And we can see that on the daily, there's nothing really relevant in terms of moving averages if we did see that low dropped. So 56,500's dropped. You can see the daily 200s coming in around that 52.5, almost $53,000, and that's the EMA. And the simple moving average is coming in the low side around $50,000. So again, more things, more points of confluence that if that low is dropped, likely to see the $50,000 to $53,000 area. Now, on the other side of that, you can see just above our local wick high from today's candle at the 50 SMA, if Bitcoin can reclaim all major moving averages up there, it's likely going to test 67, 2 to 3, take out that lower high. And if it does so, it's probably a pretty quick trip back to 69 to 70K up here at the overhead resistance from the prior cycle. Now, if we look at the weekly, we can see that the 21 EMA was spiked. And, this was a perfect tap on the 21. You do expect a bounce there. By end of week, we want to see things trading and closing back above the 9 EMA to remain bullish and try to set a weekly swing low and then a closing low. And it can set a weekly closing low on any technical closes above $65,000. You still want to see it get above the wick, though, at 67, 2 to 3. The main reason why is it can swing up here, still paint a closing low, but if it does not break above that resistance at 67, 2 to 3, then it's likely going to keep playing down to that 21 zone. Now, this would also be a confluent area. If we saw this low get ran and bought back above the weekly 21 EMA at around that $57,000, so that's about $600 higher than the actual wick low from last week, then we have the potential for that daily bullish divergence to play out if and only if we saw this monthly and quarterly zone break down again. So I do want to be very clear. It's all an if. It's all conditional. Now, when we throw on Bollinger Bands and kind of make a mess of our charts here, you can see that the daily basis band, which is the 20 EMA, the 20 simple, that's coming in right around that low again at that 56,500 or so. It's slightly above there at 56.7. And we can head back out to a higher term time frame like the monthly. And you can see that we have the 9 EMA coming in right there at those weeklies at 51.8. We also have the monthly upper first standard deviation. So we have a bunch of points of confluence on the monthly as well for this $50,000 to $53,000 area. You can also see that as long as Bitcoin is trading and closing daily, weekly candles this month below the upper second standard deviation, the upper first is the most likely target to the downside. Now, of course, it has to break down from support and resistance levels. In this case, where is the upper second standard deviation? It's coming in at 67, almost 300 to 400. So about $100 higher to $200 higher than the actual daily lower high that needs to be broken for Bitcoin. Now, the way that Bollinger Bands work is if you're closing below a volatility level or above a volatility level, it makes the next one above and or below the most likely volatility target. But you cannot purely take that in and of itself. You need to combine things like trend, support and resistance, volatility, and momentum, which those three, by the way, trend, support and resistance, and volatility are what make up momentum. You do need to take those into account when evaluating the next volatility levels. So trading and closing dailies and weeklies below the upper second standard deviation make the support immediately the area of interest. And that's that 58.8 to 61,350. And of course, we've already seen that area ran. So the next likely area to get tagged would be if that area breaks down at 58.8 at the monthly quarterly from March of 2021. Then we look to the current wick low on the weekly. If that area breaks down, then we can start looking down to the next big support area that has confluence with major moving averages and, of course, our volatility level there at the upper first. But if Bitcoin does start trading and closing daily and weekly candles back above the monthly upper second standard deviation, then we look to the next upside support, and that's at, in this case, resistance at 69K. Of course, we've got the close open here on the monthly coming in at that 71,300. We've got the wick high coming in at 73,835. And then what do you know? We've got the upper third standard deviation that would be the next big upside target in the low $80,000 region. So, this is, you do have to weave all of these things together to really paint a good picture for what is going on. Now, I did want to throw on the 5 EMA because this is a popular one that everyone uses. On the monthly, we can see that the monthly 5 EMA, which is a faster EMA, did get ran. That is right there at 58.8. So, this is a bouncy area, and you do want to see things bounce there. I do not think that the 21 down here at like $42,000 is a relevant area to look on the monthly. Not by a long shot, at least not right now. When looking at the 5 EMA on the weekly, you can see Bitcoin did lose it, came down, tapped on the 21, and is currently finding it at resistance there. Of course, there is horizontal resistance just overhead at that $65,000. So when we look at the 5 EMA on the daily, you can see that with this mess of lines on the chart here, that Bitcoin's kind of tangled in between all of the moving averages here. But you can see that it's trying to find support on it currently. Of course, if we switch that to a 9 again, which is my preferred moving average, it's also run the 9. Some people even like throwing a 10 SMA on there, and it's however you like to throw moving average, whichever your preferred moving averages are. I don't use moving averages a lot, at least on stream. I do check them periodically just to see where things are in the context of the trend, and things are pretty accurate when using the volatility levels in combination with the other factors that I talked about. Your trend, of course, this is a downtrend. Your support and resistance area, we can see that it's trapped right now on the daily in between a major overhead resistance and a major underside support. And of course, volatility, which is the bands here. And that all creates the next piece that I'm going to talk about, and that is momentum. Now, I do have a momentum indicator on here. I've got two. They're the same. And the main reason that they are the same is that I want you to see that you don't need to pay for indicators. Like I said earlier, I do, because I like to support some of the developers of these indicators, as I have, in some cases, requested to, use some of their code, or I am friends with them in some manner. And in this case, this is the KVDB Advanced Stoke. You can get a free Stoke with pivots. It is called the Reverse Stoke Panel, and it's the same thing. It's got the pivots here. You can see that the daily pivot is at 58,364. So Bitcoin will not turn down Stoke unless it closes the daily below there. And of course, that would be an initial cross of the day, the K below the D read. And in this case, we would need to see a follow-up closure below there. Of course, we're probably looking at the lows and lower at that point. But if it just ran the lows and then popped right back up and avoided a fully confirmed cross down, then, great. Now, let's go ahead and turn on the other one because it's got a little bit of extra information and just kind of looks nicer. And now, the 2-day is the other really interesting one here. We did just get a 2-day close open. We do not have any in-trend bullish divergence on the 2-day, so that's kind of out of the question. This is painting more of a reaccumulation structure than a flag structure to me when taking into account RSI, but it could still play out like a flag. I'm not a pattern trader. You guys know me that have been here for any length of time. Patterns have a very low hit rate and a very high throwback rate, statistically speaking. But when looking at the 2-day momentum pivot, now this is a regular Stoke. I do want to call that out as well. A lot of people use Stoke RSI. And if you're already using RSI, when you're using a Stoke RSI, you're literally just looking at the speed of the RSI or the velocity of the RSI in terms of its momentum. In this case, this is a regular Stoke, which is measuring close over close momentum or reading close over close momentum. Now it has begun to shift. We do need to see follow through in the next 2-day closure. Now, where would that occur? On any closes above 61,200. So that's going to be a key area to watch. And of course, where's 61,200 on the for the pivot? You can see that the pivot is nearly dead on the October monthly close there from 2021 at 61,350. So that is to say, in the next 1 day and 4 hours, so closing with Tuesday's candle, you do want to see Bitcoin holding above that pivot number, which would be holding above this October 2021 monthly close. That would be very bullish, at least in terms of a momentum shift. You still need to see all of the other criteria met. You can see that Bitcoin is currently rejecting the basis band on the 2-day, so the volatility level there is the 20 SMA, right around that monthly at $65,000. Of course, from the 2-day perspective, you do need to see that 67,200 to 300 taken out on a close just above there. The upper first is sitting just below that November all-time high from last cycle at $69,000. This is coming in just slightly below there at like 68.5 or so. Above there, we're looking at the highs likely getting ran again, somewhere around the upper second standard deviation, in between 70 and 73. The upper second is currently splitting the difference around 71.5. If it did pop up above there and start to get expansion, of course, I would be looking for the highs and higher. And we can discuss a few of those targets here. Let's presume, and we'll get into some other time frame analysis here, but let's presume that, let's just say that this is going to be the low right here. That was the low. That was the last chance for bulls to fill their bags. Bears failed. They could have pushed things down further, and they didn't. Now, we can pull a fib from the all-time high to the current low of this structure, and we can presume that if we take some of these medium-term timeframes and start looking through them, you can see they're right around the upper third, which is, when you see bands shifted against price, trending down in this case, especially on like a 3-day, you're looking somewhere around those areas for initial first pass rejections. That does not mean that it's going to reject and everything's over, but in this case, you're looking for initial first pass rejections. And, in general, I've said that I'd be looking somewhere above the high, somewhere around $75,000 to the 1272 up here at around 78. Well, because Bitcoin has now initiated a deeper move down, it actually raises this target up here to around $80,000. It's coming in at 79,400. You can see that the 1414 is right there at 82,500, which again, on the weekly, we just looked at the upper third. If Bitcoin starts to really set a low on a swing and a close, of course, then the next logical area would be the highs and higher up to that upper third area around $83,000. So this is fairly close there at the 1414. Above there, we're looking to the 1618 to the 1786, and that's coming in at roughly, deeper half of the $80,000 region at $87,000 to around $90,000 to $91,000 at the 1786. Start walking that up into the low 90s between the 1888 and the 2. And of course, we then get our $100,000 target at that 272 at $103,000 to the 2414 at that 107 to, I would give it some room, 110 or so. Now, I am looking, many of you already know this, for some of the longer term timeframes. If we were gonna go to a monthly, you can also see that $83,000 right above that monthly upper third. And I think maybe I meant the monthly. Where's the weekly at? No, weekly's weekly's at 90. So I mixed those up. The monthly's at 83, the weekly's at 90. So it encompasses all of these areas. Now, of course, as we get closures, the bands will move and start to line up more perfectly with some of these areas as well, depending on what Bitcoin is doing for price action. Now, some of you may already know that my longer term price targets, from a band level, as I adjust the chart here, give me a moment, I will clean it up for your eyes. We can take the prior cycle to get some of those longer term targets to the upside here. So we take the bear cycle down. We can see the 1272. Where's it coming in? Hey, $103,000. We just said that number, didn't we? And the 1414 is coming in at 130. Those are the initial upside targets after we see price breakout back to the all-time high and higher. Those are the initial areas that I'm going to be looking for rejections and investigating overall long-term trending structure. Now, you can see if I throw on a swing chart here, that, Bitcoin is in a monthly uptrend. Bitcoin can really just annihilate longs to the downside all at once and still be in an uptrend all the way down to, $25,000. I do not foresee that as even remotely a viable target from here. I've talked about the production cost. I've shown you the Caprioli charts on TradingView here, and I've shared some of the analysis that he's done. Production cost is around $60,000. He estimates it could be as high as the floor cost for producing Bitcoin right now, around 77. I would split the difference. Some of the numbers I've gotten back from my pool is that we're at a cost of around $70,000. So that would be your floor cost. That's before anything else. That's literally floor for electricity, as it compares to the reward, the block reward, and any transaction fees. So I really don't. I see this all as opportunity. We're currently in my personal and professional opinion trading below production costs. So this is opportunity. Of course, not financial advice. Do your own research. I know the media tells you not to do your own research. That's dangerous, but you should do your own research. And of course, I do not give financial advice. I just stare at charts. But I will give you some anecdotal advice. You only get a few times in Bitcoin's history where you have the opportunity to buy Bitcoin below production cost. Now, I will bring something up. We have begun to see, as mempool has cooled down, blocks aren't getting as full, fees are coming down. Therefore, we're getting difficulty adjustments down. That's where Caprioli, right after the halving, has a baseline lowest production cost, the electrical value of the network basically at $77,000, but it has slid down to around 70. That's because we have now seen those adjustments down. Now, he has not updated the indicator here on the longer term charts. I really hope he does. Now, by the way, I'm not saying that Bitcoin's necessarily going to top out at like 100 or 130, but those are very interesting areas that we'll evaluate when price does get there, because it will get there eventually. Let's go ahead and remove some things and just talk about that production cost for a moment. We can get rid of this fib. We can always re-pull it if we need it. So on the daily here, we can go and we can just search production cost. Now, he has not updated the indicator. Helps if I spell correctly. So he has not updated the indicator for this cycle yet, but you can see that the prior production cost for Bitcoin was, for the baseline electrical costs, unless you're getting some kind of sweet ass deal, is going to be around $30,000. That was coming into the halving on 420. Now, after the halving, this doubles. So you get half the rewards. Yes, fees spiked to make up for some of that initially in the first week or so. After the halving, that's pretty typical as well. But, even generally speaking, on the more conservative side, production cost being around, the upper 50s to low 60s right now is pretty generational, in my opinion. I do believe that, the numbers I'm getting from my pool are pretty accurate. So, and it's not a small pool. So, around $70,000 it currently stands, and we are expecting that to slide a little bit. So Bitcoin's kind of playing just on the edge of production cost. And when looking at Bitcoin throughout history, the last time that we saw it trading below production cost like it is now was back at the actual bear market low of 2022. And that was, only for a period of like 6 closes. Or close opens, I should say. It did open a few more under there, but it regained it pretty quickly and then marched up. When you see the production cost indicator sliding the floor down, that is your difficulty adjustments. You can see prior to that, then the last time that it was got a beautiful bounce out of that area was when it spiked down. That was I don't remember. Was this Luna? Was this one of the shitty altcoins? This was one of them, I think, where it spiked around the $17,000, and then you had the FTX collapse and stuff like that. So in this case, it spiked it, didn't even close below it. Let's go back a little bit more to the prior halving. And this is what I'm talking about is happening now. And the thing is Bitcoin's production cost is pretty far above where price is trading right now, as it stands at this very moment. But you can see at the prior halving back in, well, what do you know? This was March of 2020. Didn't close below, wicked below production cost, came up, hit. We got the halving. We see the floor double in terms of production cost. Bitcoin trades around it, and then you see the floor drop, and that's because you get the difficulty adjustment down. So, this is pretty typical. Great buys in this area. The time before that, where did we see it spike into production cost? Oh yeah, that was the 2018 bear market bottoms. Now, to be fair, this was the lower. This was a lower low, higher low, lower high structure. And we did get the difficulty adjustment down. It tested back down around it again. But again, it's still, if you were in here, you're very happy, and you've been very happy for a long time. All right. So, and we can keep going back throughout history. This is the interplay with the actual fundamentals of the cost to produce Bitcoin and where price is trading. It's very, very rare, and for very, very short periods of time, that you will see Bitcoin trading below production cost, and it is currently below production cost. If it were to dive deeper, this was a good question that I got. Okay, Landy, Bitcoin production cost is really low, but I have a conspiracy theory that BlackRock is working with the mining companies to put other miners out of business and consolidate mining into this big conglomerate so that they can change the fundamentals of the Bitcoin network. Okay, then we're probably looking at Bitcoin sliding down to below the monthlies, and we can go ahead and I will humor this just for the sake of argument. What would that look like? It's not something I'm looking for, by the way. I want to be very clear. There's no financial incentive to do that, to be quite honest, because somebody, a bigger player or bigger players can just fire up miners somewhere else and start, producing hash to counter this. And there's plenty that have already game planned this kind of a scenario anyway, but that would probably look like Bitcoin spending a prolonged amount of time underneath production cost, coming down and losing this weekly level, and then subsequently losing this next monthly level, which would be around 47,000 at the monthly from August of 2022. This was a consolidation area for Bitcoin on the weekly and daily in 2023 and 2024, coming into 2024, I should say, and then subsequently losing 45.5. That's where you'd probably see it come all the way back down to $38,500 to $35,000 by the monthly basis. You'd see a lot of miners going out of business and then getting hoovered up by the bigger guys. I do not subscribe to that particular conspiracy theory. I do not see that as a viable business plan. I do not see that as something that is a likely scenario to play out. There's too many bifurcated interests within the industry to see bigger players actually do something like that. Now, I know that fear is out there. I know that there's a lot of, China's got the whole 51% templated across various pools, so they're really in control. I've seen it all. I've heard it all. And what you got to understand is that Bitcoin, being the decentralized nature of Bitcoin, and the ability for anyone to join the network, anyone to aggregate hash into a pool, is the check on that. And it has, you would hear a lot more alarm bells ringing than what you're hearing right now. If that was a real viable, actionable item. So I do want to kind of address that. So get that out of the way. I do not believe that is something that would happen. Have I been wrong in the past? Sure. Very, very long time ago, I was pretty wrong about some of the pools doing some of the things that they're doing now. But, it is not something that I'm worried about from here. In fact, it would make a lot more sense to go up and then, absolutely put a bunch of miners out of business in the next big bear market. Why would you do it now? It just makes no sense. Get all the funds to do that, save it up, and then do it during the big bear markets. So it just doesn't make sense to do it from here. Anyway, that's all anecdotal. Production cost is above price right now. This is a very rare opportunity. Of course, not financial advice. Do your own research. So that is the bulk of the higher term time frame analysis as it fits into the daily. The short of the long of it is, if Bitcoin can hold above 61,350, very, very good. If it starts to lose it, watch out below. Keep an eye on the actual prior low. I'd give it a zone between somewhere around 59 to that 56,500. Give it some leeway. If you do start to see the actual monthly quarterly breakdown at around 58.8 again, we're going to run the lows, possibly lower. What does Bitcoin need to do? It needs to regain its current Daily high put in at the upper first, get above 65.5, and then start to get candle closes back above 67.2 to 3. That would break the daily downtrend. You then have a trend break. What are you looking for after a trend break? Higher lows or equal lows. Could you get slightly lower lows and still see it play out? Yeah, but you want to see higher lows, equal lows. Those are really where the opportunities lie. The rest is much higher risk reward. Now, above there, Bitcoin's probably going to run the highs above 67, right back to 69 to 70K, and then 70K to 73, and the highs and higher, right? Pretty simple, not too much more to say on that. Let's go ahead and investigate the lower term timeframes below the daily. And this is where things are a little dangerous for the bulls right now. The 12-hour is threatening to not only lock in a swing high, but potentially a closing high here. And this also is going to be coming into an area that we typically see trending rejections by the upper first. So if the upper first is right around a prior high, spike high in this case, wick high to $65,000, and we do not see that area broken above, then we have to look out below, at minimum for higher lows in terms of this structure. But, you know, back to the basis, somewhere around 62K to that 61,350. Below there, we're looking again right around $59,000 to $60,000 here by that monthly, quarterly, and that lower first. Anywhere below there, we're looking right back to the lows by the lower second at 57,600 or so, and that's right around the closes. Below there, we're looking for expansion down to test the wick lows and lower, which is main at 56,500. And, you know, the lower being somewhere around 55K is fair game, but anywhere below there, we're looking at 50 to 53. Now, where this gets a little bit dicey for bulls is momentum is starting to shift. We have 64,250 as the momentum pivot. Now, it can stay in the overbought zone for quite some time and oscillate around, but we are, in addition to that, seeing a continuation drive. This would be your hidden bear div or historical based bear div. Now, this is in trend, so this is in the downtrend. And, you know, as it stands right now, no close above, you pretty much have 2 points of continuation here. If you're going to look at the SMA, this is a 12-period simple moving average. We have on the RSI here. This is currently coming in at 61,300. Go figure. That's right at the monthly. Below there, the bearish control zone, or the edge of the bearish control zone, if you will, is coming in at where? $59,000, just right around the bottom side of this monthly quarterly at 58.8. So very relevant areas to be aware of to the downside. If we were going to dive a little bit deeper into the lower term timeframes here, we can see the 4-hour is getting a compression, and you don't want to see expansion below around 62,500. Below there, you're looking for expansion into that first target, which would be the SMA on the 12-hour at around that monthly at 61,350. Below there, you're looking for further expansion down into that 59 to 58.8 by the monthly quarterly at from March of 2022, and anywhere below there, you're looking at expansion down below the support area and likely to retest the lows and lower. So pretty easy. To the upside, back above $65,000 on the 4-hour here, and you can see that we would get expansion up. In addition, if it did reclaim that area, at minimum, we're looking for 65.5, and then subsequently, we're looking somewhere around this low here. Initially, it's $65,800 to $66,000, and then above there, the 67 to 67.2 to 3 area that needs to be broken in order to break the daily downtrend. So I hope this kind of illustrates how price is biased if certain scenarios or certain conditions are met either to the upside or downside. If you do have any questions, I am going to open it up to questions here for just a moment, and then we're going to move on to take a look at a few other things. For those of you in X chat, go ahead and let me know if you got any questions in there. For those of you in YouTube chat, I can see that one is open right in front of me. If you are in Twitch chat, I do apologize. The actual plugin is broken as hell. So I cannot see if you are chatting in there. All right, so let's go ahead and see if you have any questions. Let me head over to the YouTube live streaming there. We've got a few people speaking, or chatting, I should say, not speaking, but we've got Bobby, hello. We've got Ivan, Spin, Baba, and Sam. We've also got Don in here as well. Hi, Don. And again, for those that have asked me, the indicator is called Landy Bands. It is in the link in the video description of every YouTube video, and it is pinned to my profile, or not pinned to my profile, but it's in my actual profile on X. So it's free. I don't charge money for anything. This is all free information, free indicators, all that good stuff. This is just to help you out in your evaluation of price action to set up your trading plans. Excuse me while I adjust in my chair here. Doesn't look like we have too many questions. That was a pretty quick run through of price. I can kind of dive deep into the 4 hour here if you'd like. We do see a regular bearish divergence currently playing out, but we're not seeing the actual wick low of this particular range break on the 4 hour, and we do have an order block sitting right below it. If you're going to do the order block play, we can go ahead and get rid of the... no, we can keep it on. We're going to keep it on. The order block play is between $63,000 and on the underside of that, around 62.7 on the close open. And then the wick coming in at 62.5 on the bottom side and 63,600 on the top side. So if you're going to, we kind of have an inside bar basically for price action from Friday's candle there on the 4 hour. And if we were going to highlight that, we can see that it kind of looks something like this. So we've got pretty much the close open here that was spiked. And then we've got the 4 hour trying to hold above it, coming into today, into the open of New York session today, and then dip down into it. Playing around the lower first standard deviation on this 4 hour compression. So the next 4 hour phase is basically drop this zone. You're going to see expansion to the downside. I'm still messing with my headphones here. I just got to get a new cord. And then take out the top side on a close. Basically, you're looking at 65.5. Likely getting hit 65 minimum, 65.5 to the upside here with expansion possibly past to that 67.2 to 3. So pretty simple 4 hour setup. Not too crazy. If you're bullish, you want to see it hold right where it is. Start to form a low, take out the upper first around 64,200, and then proceed on to retest and regain $65,000, and then you can immediately look to that wick high at 65 and higher to 66 at the lows up here, and then of course the highs of that structure up there at 67 to 67, 2 to 3. Below here, of course, you're looking right back to that 61,350. Below around 62.5. When looking at momentum, 64,800, pretty aggressive on the pivot there. But if things continue to go sideways through close today, it will have the chance to possibly regain the momentum pivot. We do see green DMI. We see increasing ADX, or the advanced decline ratio, which is strength of trend. We do see regular bearish divergence, just a single drive on this particular structure, which is your uptrending structure. We did see that weakness. It's come down. Could have head down a little bit further and still remain in range. Let's see, it's 62,800. What are we looking at on the bottom side of this? 62,500. So yeah, it could even dip into the bearish control zone somewhere around the lower second standard deviation. But as long as it's holding it, it's good. If it starts to break it, close below it, then we're looking at expansion down. If you want to compare that to the hourly to try to get a lead on it, hourly threatening to set a low, need to see it closing back above at minimum 63,550 to 600. And that's no guarantee that anything good is going to come of it, but we do see that momentum got a nice reset. Just note that DMI is red, And we do see this as a consolidation, as we are looking at expansion back to the mean of this smaller range on the hourly time frame. So if this can hold up, looks pretty good. If it does pop up, we are getting a preliminary signal here in this hourly candle that if it can close here or higher, try to set a swing low and then a closing low above 63.6 or so, then we can start looking at the scale midline that's coming in at 63.8, and then possibly the bullish control zone up there, which is coming in right at $65,000. So again, all lining up with confluent areas that we have been talking about. Yeah, that's pretty much it for today. Let's go ahead and jump back to the chat, see if you have any further questions about this before we move on to other subjects. Can we have a quick look at what we chatted about yesterday? I don't know what we chatted about yesterday. You'll have to remind me. We chatted about a lot of stuff, bud. And my brain is just kind of overloaded with info all the time. Signs of potential alt season with okay, yeah, Bitcoin. Oh, okay, good question. So now question Bobby has is, how do we gauge when alt season is here, kind of thing? And there's a few different ways in which you can gauge alt season. And one of the things that I will point you to, one of the very first things that I look at is open interest on longer term timeframes. And we can take a daily, we can take a weekly, we can take whatever we want. For open interest, a free open interest chart to evaluate would be on coinalyze.net. You just click Bitcoin, you click the open interest tab, and you can get this. I switched to the weekly here. And why did I switch to the weekly? Well, if I pull this chart up, one of the big things that you chat is lagging. Oh, sorry, bud. All right, so you can see that in general, open interest is going to rise with price, right? And the dynamics between spot buying and derivative contracts is pretty interesting. So derivative contracts typically kick off the buy-ups and sell-offs. Now, in aggregate, they do not compare to spot pressure. But you can start seeing the rotation within derivatives markets pretty easily. So back in 2021, we have higher highs. Now, when we saw the higher highs come in, which to be fair, we did see alt season in the first peak on Bitcoin. And during each pullback on Bitcoin profit taking, we saw profits roll into alts. It's where you were getting your alt season. This is only one component, so keep that in mind. But we saw higher highs on price. We saw significantly lower highs on open interest. And this is where you do need to understand that this is only one component, but it's essentially what you have to look at is that, we had two big pump ups in Bitcoin. The first 2021 spike high to $65,000 in subsequent alt season is where most alts made their all-time high, but we saw a lot of alts kind of rotate. We saw a lot more alts make all-time highs again. Not typically the same alts, but many alts made all-time highs in the second peak. But we had lower open interest. Why? Because much of the profit that was being taken here by derivatives traders was rolling into alts. And then what is picking up the price from there? Well, that was the retail mania. Retail mania is going to pick up the price. So spot side buying is holding or buoying price, while derivatives are filtering out into other sectors of the market. So, no, we don't have 2017. Now, we can see that from the weekly here, to be quite honest, I mean, open interest is only just spiked where it was in 2021. And of course, we are seeing slightly higher highs on the all-time high. I do not think that this is over by any stretch of the imagination. Um, but what I would be looking for on the daily, let's say, because this was just macro so that I could show you the interplay of liquidity rolling. We saw higher highs. What's picking up price on this higher high, even though open interest is significantly lower, telling you as a derivatives trader that the market isn't really desiring higher highs. And we were talking about this at that peak, right? And open interest just was not hitting significantly higher highs. And that did mean that we had bigger derivatives players rolling out into alts and then subsequently rolling out into cash, stables, cash, whatever you'd like. And, that played out pretty much perfectly. Now, I show you that just to illustrate that point on the weekly. But if we look at the daily, we can go back and we can look at the daily interplay back here. And you can see that we were getting higher highs, and then we got significantly, we had equal lows on open interest down here. Let's go ahead and straighten this chart out a bit. We had equal lows on open interest. We had lower lows on price. This was spot getting shaky, and derivatives following through with that, trying to pick price up. But we saw a lot of derivatives pulling out into alt season. We had the distributive high back here, so lower lows, lower highs, and then distribution phase into this reaccumulation. We then saw, on the big spike ups, the first big peak on the daily time frame, we did see higher lows, higher highs on open interest, but it just was not getting that aggressive nature that you wanted to see, especially when it came back down to make equal lows and then the failed high and the failed high here on open interest as well. And then, of course, the washout right from there, to be quite honest, that was a pretty big washout right back to that $40,000 region, which was, after hitting the spring, it was a retest of the spring for that Wyckoff reaccumulation. So that's one aspect. The other aspect is to look at Bitcoin dominance. And when Bitcoin dominance is falling, but Bitcoin is making trending structured new highs, what you're seeing is a rotation of liquidity or capital. Where does that go? It goes to profits, stables, and then, of course, alts. Now, there's two things to actually look at here. So Bitcoin dominance, and in this case, you can use USDT and USDC. If Bitcoin dominance and USDT and USDC are falling at the same time, where's that liquidity rolling to? It's probably not rolling into cash just yet. You're probably looking at total 2 pumping up, and that would be your alt season. So you're looking for this to kind of sync up. You're looking for Bitcoin dominance on the daily and weekly timeframes. In this case, it is headed back up. So we are looking at either a more significant move occurring to the upside and or downside. This is direction neutral. When Bitcoin goes down, typically you do see Bitcoin dominance start to move up a bit. Not always. Sometimes it can follow price. Bitcoin dominance dips, price dips. Bitcoin dominance goes up, price goes up. There is an indicator that I'll pull up in the next live stream that can be helpful in this regard, kind of measuring the correlation between the two. But, you also have, in this case, you have Bitcoin dominance threatening to put in, a bearish divergence and possibly even a lower high. But you also have USDT trending down. It's trying to hold the lows here. Let's see what the weekly looks like for USDT. It's actually looking kind of strong, but it's made significantly lower lows. So I would expect this downtrend to continue, even if it does pop up a little bit on the daily. Daily's kind of bearish on it. But you want to see these have some confluence with each other. And then typically you're seeing altcoins do a little bit better versus their Bitcoin pairings. I don't think we're even close to that stage yet. I think that from the macro outlook on Bitcoin, we can take the 3-month, for instance. I do think that we've got probably 60 to 65% by the upper first to go before we see any significant pops in alts versus their Bitcoin pairing. But I need some more data. We need to see Bitcoin kind of hang in the range, hold the lows, and see how things react from there. There's also many other charts and indicators that you can use. This does look like this is more of a corrective area. It did come right down to our red line there for dominance, and it's holding quite well when it put in the lows. If it dips back down and Bitcoin stays in range, alts are probably getting probably the beneficiaries, at least locally, versus their pairs. Hi, Baba. I looked at the 2 month. Not this stream, but we've been tracking the 2 month. I can double check that one for you. When looking at the 2 month, this is a toppy looking candle, but in the context of the overall trend, it's nothing to be concerned about, in my opinion. So when looking at the 2 month, if you watched the monthly 2 month open video, you might remember me saying that this looked like a top on the 2 month, but it looked like an evening star reversal. But because of the 2 month trend being up, even if it did play out like a top, you have to see the next 2 month candle close below the wick low to set the swing high. And the wick low is at $59,000. So you would need to see the next 2 month, which is closing in 1 month and 25 days, close below that area to even set the swing high. For it to set a closing high within this current 2 month candle, it would need to come and close all the way down below $42.5 to $43,000. I don't see that as being viable. You have the upper first directly below price coming in at $54,000. That's where I could see a wick below to that 50 to 53, but I wouldn't be looking for too much more, to be quite honest, at least not right off the bat. When you look at, from the structure, kind of regaining the close open over here, is it more bearish than bullish? Sure, but it's all contextual. I mean, when you look at momentum is well and up from 28,600 on the 2 month. There's no direct in trend bearish divergence. Let's go ahead and go to the index to get a better picture of that. Yeah, we're not seeing anything too crazy. There is the possibility for bearish divergence to form here, but it's not significant enough as in my estimation as it stands right now. I'm not looking at this as a triple top. Even if it did put in a high here, I'd be looking for higher lows, and maybe we see the minor washout scenario I described earlier. That would be pretty devastating, and we'd be having many different conversations regarding that, but I'm not looking at things that way just yet. When you look at the monthly, what I'd be looking for on the monthly, for instance, is a bullish reset of momentum, and or oscillating within the overbought zone or around the edge of the overbought zone here. As I try to straighten this chart out, we can see that, the monthly is crossed down. I'd be looking for a cross back up, somewhere in the bullish half of momentum for the monthly here as it relates to the 2 month momentum and the quarterly momentum, which is still pointed up on any closes above $34,000. And a reminder, this is closing this month. Another big thing that I've talked about that Bitcoin has done for the first time in its history is get a volatility normalization on the 2 month chart. That is where we got equal lows or just about equal lows in the volatility metrics. So this is, this is the first time that Bitcoin is painting a stabilization on a really significant time frame like the 2 month for volatility. This is exciting. This means that instead of this downtrend persisting, which doesn't mean that it can't still persist in terms of volatility, because I do feel that Bitcoin is going to get less volatile over time, even though price is going to be very volatile within the context of these longer term timeframes. This being the first big normalization of volatility tells me that we are seeing Bitcoin mature, and eventually we will see higher peaks in volatility. So, the last peak was around 70. The peak prior to that was around 88, almost 90. And then the first couple of peaks in Bitcoin's history for its charted history are all the way up there around 96. Now, I'm not looking, we could see equal highs on or slightly lower highs on volatility here, but that's going to result in Bitcoin in this case. The only way that I'm seeing volatility expand is to the upside, because volatility expansion to the downside means dead coin, right? Volatility expansion to the downside would be down below the lower first, of course, which is below 23,000, or it's at 23,500. So that'd be a break of structure to the downside. Of course, it would have to take out the macro lows and then start expanding past that lower second, which is all the way at $8,000. And I don't see that happening. That's just not mathematically viable at this point, because you see it go back into compression as it headed back to the basis, even at $38,800 to $40,000. So it's just not a viable area to be looking at. The capos and profit blues of the world can, keep crying about it, but it's unlikely to happen. And we are only just now, we do not have a normalization in volatility on the quarterly. We're only just now seeing it come into the end of this month, have the possibility to begin its expansion on the quarterly. Okay, this is something that you do need to understand. This is early in its expansive phase on the quarterly, which does give it room to keep consolidating for quite a long time, to be quite honest, and get that bullish reset of momentum on the monthly. Allow that 2 month to really get revving up, and then the quarterly starts to go. Oh, hey, you might recall this. This is the 6 month chart. This will be the first time in Bitcoin's history that it even crosses over the moving average. We're in a different paradigm in Bitcoin. You really need to understand this. This structure and the liquidity cycles that traditional market analysts paint onto Bitcoin is like fitting a square peg into a round hole. You have two different clocks. And yes, there is a liquidity cycle within traditional markets, but you got to remember, Bitcoin is black holing this ever increasing amount of fiat that's being printed into existence. And the controls and mechanisms that are put into place for traditional markets to be functional is beginning to break down. You need to understand that because it's beginning to break down, and you're seeing the signs of it. What is the Fed doing? The Fed has literally increased their overall inflation metrics. It used to be 2%. Now they're okay with not 2%. All right, because the system itself is breaking down. And what is Bitcoin doing? It's black holing fiat. And they can slow it down. They can manipulate the cycle frequency and everything else. But Bitcoin is ticking to its own clock. And yes, its clock has been synced up because of when it was developed and deployed with that traditional market clock. But you have these two separate clocks that are beginning to diverge. And we are only just now seeing the very beginnings of that divergence between the two. And all you got to do is look at the monthly and say, yeah, this is not like other cycles. This was not like other cycles. This currently is not like other cycles. Anyone who tells you that it is just lying to themselves and lying to you, and or they have fooled themselves. Maybe they're being completely honest actors about it, and they're fooling themselves. Bitcoin has never made a new all-time high prior to the halving, and it did so this time. Bitcoin never double topped in its history, and it did so last cycle. So anyone that's telling you like, no, it's traditional market cycle theory, you just paint it onto Bitcoin and bam, boom, you got it. Bullshit. You're taking something that is a finite asset, something that has a finite supply, that has a distributed network of holders, miners, and people who can control the transactions on the network, meaning the participants of that network. And you're taking that and comparing it to a system that is ever inflationary, that has so many moving parts that are and dynamics that have to be taken into account. But at the end of the day, it's an ever inflating paper money system that this is just hoovering up all of the actual liquidity from that system into itself. And this is going to increase over time. And as much as they can fight it, it's going to be fruitless for them. Bitcoin will eventually black hole it all and become the base layer of the output energy of society. That's my opinion. That is not technical analysis or financial advice or anything like that, but that is where things are headed. Now that's in the very, very long term. Those who think that we're going to see millions of dollars Bitcoin in the next 5 years, we probably see significantly high prices in the next 5 years, but I'm not of the opinion that we're going to see $1 million Bitcoin anytime soon. But I will let you know that I am of the opinion that Bitcoin is going to continue to black hole the fiat systems. It is going to continue to diverge in terms of its cycles, and it's going to do new things that have not been observed in its prior history that will surprise many people. So you have to be prepared for all of it. And it starts with the analysis that we did this, that we opened this live stream with. So again, it's all about trend, support and resistance, volatility. Those three things create your momentum. And those are the four major factors in understanding where price is headed so that you can set up a good trading plan to take advantage of it. So I'm getting a lot of messages. Hello. Oh, we got tons of messages coming in. This is, all right. Let's see. Let's go ahead to chat again and see what you guys are talking about, and gals. Yes, Don, I know it was the last bull run for the divergences. You're going to continue to see that in the macro scale because Bitcoin is in a macro sideways and up expansion phase, compression to expansion phase, especially over the very long term. Landy picked up his favorite bag, XRP, in preparation for it. XRP. Yeah, no. Let's see. Need to reevaluate ETH when it hits 10K. It has the potential to do that. Really simple analysis on it would be the monthly. And, you take the... just for local stuff, you can take the most recent bear market, and you can get some targets at the 1272, 1414 that are pushing into the, almost $8,000 to $10,000 territory. I could see that pretty easily, actually. Keep in mind, ETH is almost tagged its monthly upper first. I'd be looking for a bullish reset on momentum here. 2 month, 1575 is the momentum pivot, and it hasn't even really begun. It hasn't even begun its expansion phase yet. So, same for the quarterly. Hasn't even got its first expansion phase on the quarterly. So I think it's going to do fine. Nice compression on the weekly. Back to the basis band. Could it come down further? Sure. If Bitcoin breaks down, it's coming down to the 618 right here by the lower first at around 2,500. Yeah, anywhere above 2K, this thing's bullish. Immediately bullish above its current lows, obviously, but looks fine. And keep in mind that Bitcoin is in a weekly compression, 5-day, getting down there, not ready to move just yet. So we're looking at, probably a week or two before things actually get moving in a big way. This, by the way, the 5-day and weekly tell me that if this does dive further down, even down to that $50,000 region, 53K, it's all a compression phase. It's a return to the mean compression phase. You're looking for that to more than likely get re-expansion back to the upside. That's what these charts are telling me. Same for the 5-day, hanging around the bases, could dip to the lower first. Where's that? 53.8. 4-day compression. We see volatility cooling down, ready to try and pick itself back up off the floor. Anywhere above $65,000 on a 4-day close, and that's going to do it. It's going to start showing the signs that it wants to go test the highs and get re-expansion back to the upside above the all-time high again. And that's coming in around $75,000. So there's your 75 to 78, almost $80,000. 3-day got that initial expansion to the downside, nice bounce. If it gets back above, 66 to 67, 2 to 3, looking good. This isn't quite ready yet. Pivots at 63.8, which just so happens to be a daily of importance here. If you look at 63.8, that is this low on a close here. No, 63.8 is this low on a close here. Right around Bitcoin's hanging out now. Well, to be fair, it's below it, but that would do it coming into the next 4-day, 3-day close. If you're looking for that, this just opened on the 3-day, so you do want to see it holding up above that 63.8 coming into the next 3-day close to get that shift in momentum. We've got 61,200, of course. Bitcoin trading above it on the 2-day. You want to see that hold. Below there, we're looking at the lows, likely getting around at minimum, 61 even down to that 59 area, and then below, down to the actual lows of this current move. So yeah, no, I'm messing with my headphones again. Sorry if you hear that. Dixie? Sure, I can look at Dixie. We can look at Dixie real quick. So let's go ahead and see that Dixie is still in a bullish posture. Daily swing downtrend, closing highs already in, and it's a lower high at that. This points to consolidation. If we see any expansion below the lower second, first of all, it's got to start closing below this high back here. This high is coming in at 105, basically. Below there, if it drops the wick low and the lower second around 104.50, we're looking at 103.80 to 104 over here by this low. It is pressure down on any closes below 105.91 today. Weekly's looking okay still. Well, no, it's not actually. It shifted. And it's 105.77. So, anywhere back above the upper first, it's probably going to play around the highs again. 106 to mid 106, maybe even head for 107. This is an uptrending structure in the context of a consolidation on the monthly. So you see the compression on the monthly, there's a bigger move coming. There's a bigger move coming for Dixie. If it breaks the lows, it's going to expand to the downside. That low is at 99.76. That would be below the lower second. Breaks that. We're looking for, probably initially 97 to around 95, and then down from there into the 90s. If it does start to breach the highs, though, above 107.40, we're looking at 108 to 110 pretty quickly by the upper second, and then the highs again around 112 to 115 or so. So keep that in mind. Sorry about the coughing. As I said, I'm not fully back yet. Gold, yeah, sure, I can look at gold. Gold, nice consolidation. Is there any bullish divergence forming? We do see a nice reset on. This would be encouraging. Bitcoin and gold tend to run together, but I would have to throw on a correlation metric to really get into that. Maybe we can do that on Wednesday during Wednesday's live stream. But 2322 is the momentum pivot, and it's currently playing right at that currently. There's a nice order block that it's trying to hang on to here as well. That's coming in at 2300 to 2280. Did swing that area. So you do want to see that hold up, get the momentum reset, and take out its last lower high at 2352. Back above there, it's going to play around the highs, probably the low side zone, 2360, 2370 up to that upper first, where 2370 is coming in. Anywhere below here, and it's probably going to take a drop, expansion down to like 2200 initially, and then you got to be aware of the 2150 zone down here, 2150 to around 2185. But as it stands right now, it's not threatening too much at the moment. But if you do start to see the local area breakdown, then sure, 2200, 2150 is probably in the cards pretty quick. Yeah. Well, I appreciate it. Thank you. Okay, so let me go ahead and look over here on X. We got not too much chatting going on over here. Again, I don't know if you can chat on X. It's not something I can control. So that's, I'm just kind of at the mercy of what X is allowing. I don't really understand what they're doing with their live streams in that regard, where some people can chat and others can't. That's why I do recommend, because they also compress the hell out of the stream. Even though I'm pushing a really high bit rate, I'm on fiber. I've got 2 gig fiber here, so there should be no issue on that end. So yeah, typically I'm pushing about 1.5 upstream. So bit rate's set pretty high. I don't know what the deal is over there. That's why I do recommend most people come over to the YouTube stream. It's a lot cleaner. And then, of course, do all the social stuff. This is all free info. And I'll do my best to help you guys out and gals out when it comes to getting a gauge for where things are going. Like, follow, share, subscribe, all that good stuff. Yeah. I can glance at traditional markets. Yeah. I mean, I do regularly trade and am in position on in trades right now in traditional markets. Beautiful gap up from Thursday to Friday. This is a nice double bottom being painted here on Dow Jones. Dipped right into our zone, did not break down below. That was coming in at that low side of 37,700 or so. Did swing it, came back up to the basis, came back down for that nice hold of the lower first, and then popped right back up above the basis and upper first and heading towards that upper second. I wouldn't be surprised to see this consolidate or come back down in lower term time frames, maybe even the daily a little bit more before trying up at minimum to gap fill up here around 39,000 to 39.6 or so. That would be pretty expected, to be quite honest. And then it's just gauge whether or not it can actually crack above the all-time highs up there. 38,455 is going to be the momentum pivot. I'd probably increase that to around 38.8 to 39. And, it's currently trading right around there and closed right around there. So momentum is chasing it. It might get a little bit of a momentum reset. Yeah, so as long as it's above this last spike low below the lower first here on the daily, it's looking fine. Below 38.5, 38.6 area, then probably going to run back to around 38 to 38.2 in between the support and the basis here. And then gauge it from there because you need to see that the lows hold up. Otherwise, it's looking for more downside into the mid to low $37,000 region. Or 3,700 points, 37,000 points. Same thing for, well, actually, this looks a lot stronger on NASDAQ. So we did get our gap fill. I didn't mark the gap fill. Maybe I did and deleted it. We did get our gap fill. That is something we were looking for here, was the gap fills down here. We got our gap fill. Nice mean reversion back to the basis. Nice hold of lower first. Scoot right back up above. Need to see it break out above the upper second now at 18,320. Looking good to run the highs and higher. This looks a lot better than Dow. Momentum is pivoted at 17,621. That's great. So it's got room. It's getting a turn in. This is probably going to flip the moving average as well for BBWP, which is the volatility metric. So it looks good. That's good. I'd be looking for maybe a little bit more upside then, even though Dow is looking pretty sickly. In terms of its area that it's in, it's still strong on the chart, so I'm not worried about it. Same with SPY. SPY actually looks really good. To at least test higher, it needs to test the upper second, right around this lower high again. It's coming in at 520. It's got room as long as it's holding 508 to 510. Actually, 506 to 510 because the basis is down here. Wick is around 508. I'd give it room. You do want to see it for continuation immediately to go test around 520. You want to see it holding this upper first, which is around looks like 513.21 or so. Looks good. Post-market pullback, yeah, it's fine. Printing its first little bar, green DMI. 507 is the pivot, so yeah, you kind of want to see it holding this this last low from Friday. And looking good. And yes, I'm in call option positions. So heading up into April, coming into May, I was in puts. So I was building all on the highs here, and then I actually exited most of those puts. I still have one hedge, but I'm going to build it if we see anything fail, I'll build it again. Otherwise, it's going to get cut pretty soon because the majority is it's just a hedge. So the majority, all the profits basically been taken already. It's just a spot to build from if the highs fail at around 525. Yeah. Hey, see, you got me to do some traditional market analysis again. I don't typically talk about it, but yeah, no, I trade traditional markets, you know, on the daily, of course, the monthly and quarterlies and options expirations. I'm all in that. Yeah. You know, quarterly are calls that I still have. They're going to expire the end of this month. Yeah. Massively up. Yes. Massively up. Yep. As I think that might do it then for today. You guys will have to let me know. We go ahead and flip the music back on here. What do we want? Let's do this Stranger Things cover. This is a synthwave Stranger Things cover. Let's go ahead and do this one. And get some background music. I'll jump into the chats real quick. See if anybody's got any questions for me or comments, feedback. All right, let's go ahead and jump over into the chats here. Not seeing too much in the way of chat. the last thing is boo Landy, unfollowing now, winky face. What did I say, Bobby? Was I doing... Oh, because of the ETH. Because I was looking at ETH. And for Baba, in the context of a bull market and for the 2-month, typically if you see a reversal candle like that and it doesn't hold up, you typically see a bullish engulfing on the other side. I know that there's a few people within the Discord server, I believe Torque and Bobby have also pointed this out as well. It is valid because of the context of the overall market structure. So that 2-month, you know, it is an evening star reversal setup, but it has to confirm in the next 2-month candle, and that would be this one. But it's still not even guaranteed to put in a closing high because it's just, it would need to set another 2-month and at minimum then begin breaking down from it. So you would be looking to the following 2-month candle after this current one for that. As it stands right now, right from here, it could set a swing high on any closes below 59, but you're looking at 43 to really confirm it, and that's not something I personally have on the board right now. It would only become available as a viable area if we saw the monthlies below it. If we saw the monthlies here at 47,000 to 45.5, then I'm going to call big problems. Probably seeing some systemic bleed from the minor side, of course, as we discussed a little bit earlier in the stream. And then you're looking at some major market structure changes, and I still think it would result in more upside anyway. I mean, the monthly is putting in a high and then a higher low is the way that things are gonna go, in my personal opinion and my professional and personal analysis. Why should it not do? Oh, you guys are talking about ETH. Yeah, look, I own a lot of alts. For those of you that have been here for a long time, during the entire bear market, what were we doing? We were packing our bags. And aggressively under $20,000 on Bitcoin, everything, I was just hoovering everything that I possibly could into my long-term bag. And, you know, that includes ETH and all of the alts that most people in Bitcoin like to make fun of, which is fine. But those are just plays to get more USDT and USDC to roll into more Bitcoin during the next actual bear market. So I'll hold that all in stables, and then next bear market, pack bags again and keep leveling that shit up. It's like a video game. I mean, shit, all my traditional market, all my options plays, everything goes into Bitcoin, everything. I don't keep cash, I don't keep stables, except for very short periods of time. Yeah. It's just, yeah, I'm Bitcoin eat the world memes is where I'm at, yeah. That doesn't mean I'm not going to take a play on alts. I mean, I don't have to like something to make money on it. Trust me, there's plenty of traditional market tickers of corporations that I vehemently hate that I'm more than happy to make money on. So, that's where I cut my teeth. Traditional markets, yep. All right. I think that's going to do it for today then, guys and gals. I will, of course, have a recorded video out after the daily close for the Tuesday candle. That's tomorrow. And I will stream that recorded video on X and only X for those that would like to get in and watch it and chat in the chat with me. I will then, of course, right after the stream, while that's processing, as soon as the videos are done uploading and processing for X and YouTube, I will post them directly to my feed on X so that you can watch the high quality versions of that particular recording and stream. And then I'll be back here on Wednesday for a live stream. It was a little bit later today. Had some stuff going on, but yeah, Wednesday it is for the live stream. So if you've got questions or things come up in between now and then, I would suggest that you get those ready and prepared to ask me. And again, if you are interested in the set of bands here, this is more than just a set of Bollinger Bands. This is a indicator set. It has triple Bollinger Band set. It's got moving averages built in. You can customize whether they're EMAs or SMAs. You can customize the length. You can customize the volatility read metrics. I would not touch it though. BBWP is very well tuned for analyzing volatility. There's also a super trend in here if you like super trend, and there's even some indicators for when price breaks above the upper second, upper third, lower second, lower third areas, and then EMA trends. So the 9 is above the 21, and both the 9 and the 21 are above the 200, then it's an uptrend. If they're below each other, then it's a downtrend, and of course below the 200, it's a downtrend. Got break above, break below. I can show that actually. It's actually pretty simple. It's just for a quick look at trend. We can take off the Bollinger Bands here. And I can show you how to interpret this. And even take off moving averages and support and resistance. And you can see green diamonds here show you that the 9 is over the 21, and the 9 and the 21 are over the 200 EMA. When they go away, you're still over the 200 EMA, but you're no longer in an uptrend as it relates to the 9 and 21. When you see a yellow label down, that means that price has closed below the 200 EMA, so on the 4-hour it closed below. And then you see the red diamonds painting, that means the 9 is below the 21, and the 9 and the 21 are below the 200 EMA, which means that you have a significant downtrend. Got to break above, break below. There was no 9 over the 21s here. Break down, back down below the 200. 9 gets back below the 21. We see that this is now in a transition phase. So basically, if there's no diamonds, you see that it's likely either going to turn into continuation to the downside in this case, or you can see that it will break back above the 200. So you can see that currently Bitcoin on the 4-hour is below the 200s, as it has not gotten the yellow label up yet. And the 9 is not above, the 9 and 21 are not above the 200 as it currently stands. So we can illustrate that pretty simply by going to the, not doing that, but very simply, Jesus, I'm just going to keep making the same mistake over and over again. All right, so you can turn on moving averages, got 9, 21, turn off the 50, 55, 100, and the 200 SMA and 369. That one's for Bobby there. But you can see Bitcoin did try to breach above the 200. But the 9 and the 9 and the 21 have not crossed above. So if they do, the 9 is above the 21. It shows that you lost this 9 under 21. When it lost that, you see the red diamonds go away. Bitcoin is riding the 21. If the 9 and 21 break above the 200, you'll see the yellow label up. If the 9 and the 21 are both above the 200 and Bitcoin is trading above the 9 specifically, then you'll see the green diamonds printing. That's what you see over here. So we can go back to the last time this occurred. You can see that Broke down below, 9 below the 20, below the 200, 21 and 9 both below, and 9 is trending below. You see that the red diamonds are painting. And then when the 9 breaks back above the 21, goes back to the 200. Once you get the 9 above the 200, get the yellow label up. Once both are above, you get the green diamonds, and showing you that we went from the downtrend, transition phase, break above, and then bullish phase in terms of EMAs, not structure, price structure, but EMAs. Yes, it was bullish in terms of price structure. You had the nice little inverted herp and derp. Then you get the trending of this up. You know, you can get the cross back down below the 9 under the 21 in between, but it was still above. Never saw a break below the 200. Then shot up again, so on and so forth. Comes back down, downtrend, so it lost its trend, being reverted back to the 200. Tried to regain, tapped the 200 again, regained it, green diamonds, back to the 200, green diamonds, break below, red diamonds. So that leads to where we are now. So possible transition phase, or this will result in continuation. Easiest thing to do is turn back on the Bollinger Bands. You can see where expansion is going to occur. Expansion is going to occur below the. Oops, I forgot. I left the labels on for all of these other ones. So you can turn off the labels so that they're not painting which EMA it is next to it. But it's very easy. You can see that if it loses the 21 by the lower first and then subsequently loses the lower second at 62,400, 62,500 area, then you know we're looking at probably this low getting tested and lower somewhere around 61.5 to 61.8, and then it's down to the lows again. In fact, this is essentially saying that it would go test that monthly at around 61,350 or so. If it holds up, great. But that would be expansion down plus getting below all the major moving averages. So. So that is there for you if you'd like to see it. I have it turned off. Sometimes I turn on the diamonds so that I just know, okay, it's trend, possible trend shift, especially if it can break back above the upper second. Then we're looking at highs and higher. Easy, easy, easy. Oh yeah, Don, I've shown this a lot. It's just, you probably missed it. I know that you're time limited, so yeah, I've shown this a lot, especially when we were first working through development of the concept of the indicator. But that brings us to around 2 hours now, so I will let you go. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And with all of that said, Landy out.